This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, December 8th, 2015. Euro dollar. So the euro has pulled back since trading all the way up to the 38.2% fib retracement off of the August high to recent December low move, just shy of 110. At this point, the market is looking for a lower top in favor of a resumption of the broader medium-term downtrend back down towards those recent lows that we saw the other week at 105.21 and eventually towards the 104.60 March base. At this point, any rally should continue to be very well capped up towards the 110 area, while ultimately only back above the 50% retracement off that move around 111 would compromise the current bearish outlook. Sterling dollar. So cable continues to be confined to a very well-defined downtrend, with the market putting in a series of lower tops and lower lows off that 2015 high at 159.30, and the market is now poised for a fresh downside extension back down towards the 2015 low at 145.66. At this point, look for any rallies to be very well capped, while only a break back above the most recent lower top at 153.36 would compromise the current bearish outlook. A break back below the recent low that we saw all the way down at 148.95 would confirm a fresh lower top in place by the recent high at 151.59 and again expose that 2015 low at 145.66 further down. Dollar yen. So not much going on with dollar yen over the past several days, although the market is clearly confined to a very tight range between 123.76 and 122.23. As such, a break on either end will be important, with a break above 23.76 to expose a retest of the 2015 multi-year high at 125.85. But a break back below 122.23 would open the door for a more significant weakness and accelerate declines back into the 119 to 120 area initially. Euro Swiss. So Euro Swiss remains confined to a tight consolidation over the past several weeks, although the market is confined to a more longer term recovery outlook off that low that we saw, that record low that we saw earlier this year. At this point, given the recovery outlook, an eventual upside extension is favored back above the recent September high at 110.50 and towards the 112 to 150 area for 115 area further up. Any setback should therefore be very well supported above 107, again above that recent low that we saw going back to the month of August at 107.14. Aussie dollar. So Aussie continues to be very well capped into rallies, with the market once again stalling out ahead of 74 and stalling at 73.85 in favor of this latest downside acceleration. At this point, the downtrend remains well intact, and the market is favored to trade back down towards a retest of that multi-year low that we had seen back in August, just shy of 69. Dollar CAD. So dollar CAD continues to trade higher, with the market confined to a very constructive uptrend, and the market has now broken back above the recent previous peak from September, that 11-year high at 134.57, to trade up through psychological barriers at 135 and threaten a fresh upside extension over the coming days and weeks towards the 140 area. At this point, any setbacks should continue to be very well supported above 130, while ultimately only back below 128.32 would compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi has come back under pressure in recent trade, and this market continues to be confined to a broader downtrend after stalling out back in the month of September, or stalling out back in the month of October, just shy of 70, around the 69 area. At this point, a lower top is now sought out around 69 in favor of a fresh downside extension back towards those August lows that we'd seen in the 62 area. SPX 500. So the S&P 500 has stalled out into this latest rally that we saw in the month of November at 2117, with the market since consolidating and potentially putting in some form of a top. At this point, only back above 2117 would open the door for fresh upside back towards the May record high at 2137, while a break back below 2003 would confirm the significance of the formation of a medium-term top and open the door for further acceleration of declines. Gold. So gold seems to be showing some form of a base after stalling out by multi-year lows at 1046, though the market will now need to establish back above 1100 to confirm and officially take the immediate pressure off the downside. Inability to break above 1100 will put the pressure back on the downside and open the door for a break below 1046, exposing those psychological barriers at 1000 further down.